This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So today is a good day to discuss Warren Buffett and Berkshire Hathaway. I've been contemplating the Berkshire Hathaway portfolio recently because they keep making some trades in new positions in there. And obviously he's sitting on what should be about $200 billion in cash. So a lot could be going on, but it is actually relatively quiet. Now, the portfolio owns 42 holdings currently, and I do feel like that's on the smaller side than what they have owned in the past. Well over 50 holdings at certain points. But remember, a couple of years ago, he got rid of most of his banks. So that was a lot of positions that were, moved out of there. And he hasn't really replaced them en masse at all. So we're still kind of waiting. But I thought I'd take a look and see what are the 5 best stocks that he owns in his own portfolio, and which ones should you be buying? So I looked through it and I picked out 5 that I like a lot, and we could discuss what's going on with those. And then I will talk about a couple that I'm sure you're like, why didn't you pick those? And why I didn't pick those. So we're going to have like a pros and then a few cons. So let's dive right in. So the first one is, I don't think anyone's going to be surprised, one of his energy plays, and it is Chevron, ticker CVX. I now own it in my own personal portfolio because they bought out a smaller producer that I owned a couple of years ago. Maybe it was a year and a half ago now. And so now I too am a Chevron shareholder. I feel like anybody in energy, ultimately you're going to own either Chevron or Exxon. That seems to be the way things are going. If you own any of these smaller guys, they're going to get bought out eventually, and you're going to end up in the big guys. So Chevron is one of the big oils. It does have the producing side, oil and natural gas, but also has the refineries and that aspect of it. Plus, they are also global. They're not just drilling in the U.S. And so they are trying to buy out Hess right now, and that's on hold as they're in arbitration with ExxonMobil, another big oil that I also do own. And they're trying to get into the Guyana play. And that seems to be a big area for all these big oil companies right now because they are able to get the oil out of the ground down there. So that, keep an eye on that. Nobody knows for sure how it's all going to play out, but we're waiting on that. So where is the stock right now? So the PE is at 12.2. And they do pay the dividend. That's why a lot of people like Chevron or Exxon. The dividend is yielding 4.2% right now. That's pretty juicy for our patients. And that would be $6.52 a share. It is a number 3 hold, but it hasn't reported earnings yet. So we're waiting. This is on July 24th. It's coming up quickly, though. So by the time you listen to this, they may have reported or are imminently about to report. Okay, so we have August 2nd is the report. So yes, that's coming up very quickly. So tune into that. 1 year, the shares are down 2.9%. And remember the S&P 500, this is over a year, not just year to date. S&P 500 is up 20.3%. But as we know, the S&P 500 is now being driven by about 7 or 8 stocks. And Chevron is not one of them. So it is lagging considerably. But again, it's pretty cheap on a PE basis, especially. And that is common when you get into these cycles with energy, and we are in another cycle. But crude is holding on around $80. That's very beneficial to these companies. And natural gas is up off the lows. That's also beneficial. Now, again, they have the refining side and a couple other business segments that you have to keep an eye on as well. That's going to deal with the earnings and revenue side. Price to sales is at 1.4. That's pretty low. So yeah, this is still a value, Buffett still likes energy. He's spending a lot of money buying Occidental. And you might be wondering, why didn't I pick Occidental? I'm not a big fan of Occidental. I don't feel like it's as good of a business as Chevron. It does not have refining like Chevron does. It does have a big chemical division, however. But if I had to pick between the two, I'm definitely going for Chevron. It's, again, I like the management a lot more, and it has less debt than what Occidental has. So, but Buffett's keeping both, and they're both very prominent in the portfolio. So that's Chevron, ticker CVX. Then, of course, we have the one bank he does still own. And I do like the banks here, especially these too big to fail banks. It is Bank of America, ticker BAC. And he's owned it many, many years. It has lagged, but over the last year, it's actually up 32.6%. And the S&P again is up just 20.3%. So we have seen some bottom feeders coming in after the banking crisis of last year, and these stocks got real cheap. Now, remember with the banks, PE is not as important, but Bank of America has a PE of 13.1. But what you want to look at is the price to book ratios. And remember, the analysts always say you buy at 1 on the price to book and you sell at 2. 2 means it's fully valued. So Bank of America price to book is at 1.24 right now. So that's on the lower end. So it is cheap. It also pays a dividend, once again, yielding 2.3%. Or 96 cents a share. So not the greatest dividend. I know many people still believe the banks, oh, those are good dividend payers, but many of them are not really, at least not what they used to be before the financial crisis. So keep that in mind if you are looking for the dividend. Chevron, much better option, but still getting something. And it's a Zacks number 2 buy stock. And they've already reported, so we've got their second quarter earnings in, which is probably why it's got that number 2 rank, because they did beat in the second quarter. So that's Bank of America, ticker BAC. Then he has a couple other financials that are intriguing that nobody really talks about much because they got very expensive. He didn't sell them, he still owns them, but the valuations have come down and are looking a bit more attractive now. And I'm talking about Visa and MasterCard. So let's start with Visa, ticker V. He's owned it since, I believe, 2011, I want to say. They bought these two around the same period, and they've held them ever since. I don't think they've even ever added to it. They've just bought it and it's sitting there. But what a ride it's been since he purchased it. And so there was really no reason to do anything except just, watch it go up. But Visa has kind of stalled out recently. And I like to say with these two companies in particular, they kind of go in phases and they get real hot on the market. And then the valuations get a little bit out of sync with what's going on in the business, which is still good, but it gets a little out of sync. And then it has to take basically like a timeout to revert back to the mean, I guess you could say, and for that valuation to kind of come down. So it tends to trade in kind of a narrow trading range for even a year or two. And then the valuation comes down as the earnings continue to rise a bit. And instead of trading at 45 times, it's now trading at 26.6 times, which is where we are today in 2024. So the valuations have come down quite a bit on Visa. But over the last year, it's still up just 10.7%. So it's lagging the S&P 500. This year, I think it's kind of flat. It's not really doing much at all year to date. But you're just kind of waiting while those valuations get more attractive. And I picked this one also because if the stock were to sell off bigger here, then, and we get that PE down into like the low 20s, I might be even more interested then. Even though it's not classic valuations, that's pretty cheap for Visa historically. So I will start adding it to my watch list for sure if it manages to fall down that low. So dividend, there is one. It's only 0.8%. Or $2.08, and it is a number 3. It did just report earnings, so go check out its earnings reports, of course, before you buy anything. You should know what's going on. But Visa, I've always liked it, and it's looking, like I said, much more attractive now. Let's turn over to MasterCard. It's a little more expensive on MasterCard, but it's a similar story. It's also reverting back to the mean. Over the last year, shares are up 11%, so similar to Visa. It also pays a dividend yielding just 0.6% or $2.64. PE, like I said, is a little more expensive at 31 times. So again, I would like to see it sell off a bit, and then I might be interested in MasterCard as well. It hasn't reported earnings yet. It's reporting on July 31st. So that's coming up quickly. By the time you listen to this, it might have already happened. So tune in for those earnings on MasterCard, and it's ticker M as in Mary, A as in Adam. And then I'm going to wrap up the top 5 stocks I think he's holding with one of the more, I guess this would be controversial name really, because it was when he bought it, and it is Amazon, ticker AMZN. I own it in my own personal portfolio. I bought it a number of years ago. Gosh, I can't remember when, 2016, I want to say. So a while ago, but Berkshire has also owned Amazon for quite a while. It wasn't Warren Buffett who bought it. It was one of the lieutenants. They have sold a little portion of it over the years, and but they never bought anymore, and it's still just kind of sitting in there. But I'm liking what is happening with the earnings, and that the PE has come down to like a historically, I don't know if this is the cheapest it's ever gotten on PE, but I want to say yes, it may be. Because it used to trade at like 80 or 90 times earnings. Nobody cared because it was Amazon. So they were always like, PE doesn't matter. Valuations don't matter. You're buying, the Kindle, you're buying AWS, you're buying these other things. But now it's a little more mature company under the new CEO, Jassy, and PE, if it matters, it's now at 40 times, 40.6 times, and has a PEG ratio of 1.37, which is actually pretty low for this type of company. And so I'm finding these things to be kind of intriguing. It is somewhat reverting, back to a standard type of company. And so we can start to look at some of the valuations. Now, the rest of it is still very expensive. Price to book is at 8.9, but price to sales is only 3.2, which isn't that bad. And that would be considered low for a tech company, but it also has the big retail component. Remember, it owns Whole Foods, and it's got its own Amazon marketplace. So that might be a little bit stretched for a supermarket chain and retail side. So it's kind of this weird hybrid combination, right? But like I said, it's pretty cheap here. Stock has been surging over the last year, up 43.4%. So easily beating the S&P 500 over the last year. No dividend. So it's one of the few of these big techie companies that has not declared the dividend yet. Will we get one soon? I wonder. They don't have the same great free cash flow as some of the others, but definitely could pay one if they wanted to. I just think they don't want to. So we'll have to wait on that. They haven't reported earnings yet, though, so who knows what they'll say in that. It's coming August 1st, so that's coming up soon, too. And by the time you listen to this, you might have heard it already. It is Zacks number 1 rank strong buy going into earnings. So that's interesting little detail. And just taking a look to see what's going on. One estimate is up in the last week. So we're getting that number 1 rank off of one bullish analyst there, but I'll take it. And it's only moved the Zacks consensus for the year up a penny to 4.59 from 4.58. But they only made $2.90 last year as they were really struggling. And that's when we had a lot of the layoffs and they were cutting costs. So that appears to have worked, at least on the earnings side, because those earnings have really turned around, up 58% this year expected to be, and revenue up 11% this year and next year. So still seeing some double-digit revenue growth. They just had Prime Day, and they had a very solid day with $14 billion in the Prime Day period, which was up year over year. Apparently, consumers buying a little more practical things. I know I did. I bought some coat hangers. Not too exciting, but I did wait for the sale. I did get them on sale like 20% off or something, but I was waiting. So there you go. I think a lot of other people were waiting to buy some of these practical items as well, which Amazon is great at selling, right? So Amazon, this is going to be an interesting one. I do, as I mentioned, own it in my own personal portfolio, but it is still intriguing that Berkshire also owns it. So ticker AMZN. And then the companies that I didn't cover seem kind of obvious now. Like, what about Apple, right? That's its largest holding, 40% of the portfolio. But Apple's just a little too expensive for me, even though some of these others are that I already mentioned. But it's trading at 34 times. And the growth just isn't there to justify it. At least Amazon, we're having, big time earnings growth and double-digit sales growth to justify its PE, but Apple just isn't really happening. It's still single digits, and they keep saying, oh, when they roll out these new AI phones, everybody's going to want to buy one, and there's going to be this huge surge of buying of the phones in this like next trade up cycle. But is that going to be true? I don't know. Are you going to trade in your phone to get one with AI? We're going to find out. But if it doesn't happen, then the stock is more expensive than ever here at 34 times. So that's why I didn't choose Apple. Another one that he is buying recently is Chubb, ticker CB. That's the huge property and casualty insurer. They're headquartered in Switzerland, I believe. 106 billion market cap. Buffett likes his insurance. Can't deny that. And it does have some value components, as insurance usually does. PE of 12.6, so that's pretty cheap. Does pay a dividend, but only yielding 1.4%. That's $3.64. It is a Zacks number 4 sell. They already reported, and estimates are being cut a little bit. So I guess the analysts were a little too bullish on Chubb, but Buffett's thinking longer term. He's just trying to deploy some of his money. Insurance is what he knows, so why not buy it? The rest of us may seem like, oh, that's so boring, but sometimes boring is good, right? Especially if you can get it cheap enough. Now, I just feel like Chubb, is this all that cheap? I'm not so sure. I don't think, 12 times I would prefer to get it even cheaper if I could than what this is right now. And I think that there's enough other value stocks out there for us value stock investors that we can buy in some of these other interesting names, even in small caps. So remember too, Buffett is kind of limited now to just the large caps or even mega caps. He has, or his lieutenants have, bought some smaller cap companies, like when they owned RH, which is a smaller to mid cap company. But it's a lot more difficult. It doesn't really move the needle. If they buy, even if they buy outright a small cap company, they have 200 billion sitting there. They buy some small cap for 2 billion, 3 billion. What's it going to do? It's not really going to move the needle anywhere. So he's mostly limited to these larger cap type companies, which is reflective of the 5 that I chose even, or any of these that we're talking about. So Chevron is huge. Bank of America is one of the too big to fail. Visa, MasterCard, also big. And then, of course, the juggernaut that is Amazon. And then the juggernaut that is Apple and even Chubb. So you can see like that pattern there. So keep that in mind when you're really looking at the Berkshire portfolio. It's not for everyone. And especially if we get the rotation, which it looks like we might be getting into these small caps, you should have a combination. You shouldn't be all large or all small. You should be diverse and have select in both, so that if the large really cools off and, we have a period where they go down or nowhere, they're just kind of treading water, kind of like Visa and MasterCard are doing now in 2024, then you have other things on the small cap side that maybe might be outperforming a bit, and that those are, seeing some significant upside. So be diverse. Don't just follow Buffett, blindly down the yellow brick road there. He would say the same thing, that he is much more limited now, that his company is so huge and he has so much cash on hand. So keep that in mind when you're looking at Berkshire Hathaway. Okay, so let me recap all the stock tickers I talked about. So there was Chevron, ticker CVX, which I also own in my portfolio. Bank of America, ticker B as in boy, A as in Adam, C as in Charles. Then we had Visa, it's just V as in Victor, it's just a single letter. MasterCard, M as in Mary, A as in Adam. And then we had Amazon, which I also own, ticker A as in Adam, M as in Mary, Z as in Zoo, and N as in Nancy. And then we mentioned Apple, AAPL for that one, and Chubb, which is just C as in Charles, B as in boy. So as always, be sure to subscribe to get all of our podcasts, because I'm trying to cover as much as I can on the value stock side, especially if we get some kind of pullback or correction here. We're likely to see those on the growth names, but that could mean a bigger focus on value may be coming once again. So what are the value stocks out there? What are the ones that have rising earnings and that look attractive? I'm trying to cover it every week here on The Value Investor. Send me in any of your questions or concerns. Tweet at me. And because I'm always wondering what you're all thinking and what you want to hear about value out there. So I'm open to your suggestions about what to cover on The Value Investor. Send them to me on Twitter. It's just at my name at Tracey Rynick. But otherwise, be sure to subscribe somewhere. Get us on Apple Podcasts. Get us on Spotify. We are on YouTube on a separate podcast page, just Zach's Podcast. You can subscribe over there. And thanks to several thousand of you who have decided to subscribe on YouTube. It is still audio on YouTube for the Value Investor Podcast. It's only Zach's Market Edge, which I also do every week. That's on a video component there on YouTube, on our regular YouTube channel. But get all of our podcasts by subscribing on our YouTube channel. You can get the ETF podcasts and several of our other great podcasts there, but be sure to get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.